Austin home prices dropped 50%. Wait, am I being misled? Hey, Daniel here, your local Austin real estate expert. If you're thinking of buying or selling in the Austin area, you can give me a call, shoot me a text, send me an email, or schedule a Zoom call. Be happy to help you with that smooth move into the Austin area. So, what we're looking at today is some clickbait. We're looking at something I found that I wanted to kind of dissect a little bit with you guys and give you a couple different charts that will help you see kind of a bigger picture, more accurate view of the Austin real estate market. So, this article caught my eye because it said Austin home price drops 50%. I don't know if you can see this part, but at the top where it's actually the URL, it says Austin home prices drop 50%. So it really is clickbait. As you read through this, though, it becomes very clear that this is a single home that they found. So a multi-million-dollar home in Austin, Texas is now listed at more than half of its previous asking price, according to Realtor.com. Located on the lake, it dropped $2.4 million in January. So that is one example. We have no idea what's going on with that homeowner's life, if they just have to sell it, if they did it way too high to begin with and they knew they could go lower, or they're in a pickle. They have to sell it to avoid bankruptcy, right? Typically when someone drops a price by that much, it's not 2.4 million per se, but by 50%, there is something else going on. And it really has nothing to do with the market per se, but more so that specific situation that person's in. Now, the next one says overall home prices in Austin have decreased in recent months, with the median home listing price down 7.1% year over year. Now, that is a way more measured response. Yes, I agree that home prices have come down. Now, it's different parts of Austin, right? I've done a lot of reviews with clients, and I did a review a couple days ago with a client in Kyle, just south of Austin, and those home prices have gone up, right? So year over year, they've gone down about 4.9%. But in general, the demand in Kyle has gone up to where days on market is low, and generally people who bought down there bought for a cheaper price than what it is now. So it really depends on the neighborhood, the part of Austin. But yes, overall, 7.1% down, that makes sense. And I'm going to show you a chart later that kind of shows why that's not really a big deal, why it's not that scary. Looking further into this, so this specific home, they do some odd examples. 3-bedroom, 3.5 bath, dropped 53%. So it was listed at 4.9, they dropped it. Now it's saying other luxury homes have seen similar decreases, and it shows another one that dropped 1.75 million, but it was a 9.25 million. I don't know if that's really the same. They dropped it by less, and it's much less percentage-wise. While another dropped 200,000, that's nowhere close to 2.4 million. And went from 2.7 to 2.5. That's also not the same, right, as dropping 50%. So really odd choices here. That's why I'm always hesitant whenever an article points on, look at this house and how much it's dropped. There's many thousands of homes available in Austin, right? So you can cherry pick anything if you're trying to make a point in an article. Looking further down, luxury homes, yep. So this was actually the best sentence of the article right here. For the year ahead, we expect continued slowing in housing prices. To put some numbers to it, by the end of 25, we expect somewhere between 1 to 1.5% year-over-year price appreciation. That's a way different sentence than anything else in the article. It starts with home prices are down 50%, then it says home prices have come down 7.1% year-over-year, and then it says by the end of this year, we expect 1 to 1.5% appreciation. So going the other direction, right? That I actually agree with. Okay, so now I'm actually going to show you guys some charts and some data that's happening right now to kind of help you understand what's really happening in the Austin market. So the first thing is just looking at mortgage rates, because a big reason prices shot up as high as they did is because the mortgage rates were historically low for a super long time, end of 21, 22. So let's see what's going right now with the mortgage rates. This right here, I don't know if I can highlight it. here we're looking at 30-year fixed, a top-tier conventional loan. It is currently sitting at 6.64%. Okay. Now, if you're looking at this through the eyes of someone who bought in 2021, you'd think that's really high, because in 2021 you could get it at 2%, right, or 3%. But that was a historic moment in any housing, and so we're never going to see 2 or 3% interest rates like that again. Typically, what we saw, and I can show you. Let's see if I can pull up a chart. So this is the year, but let's look at 5 years. So we see over here, interest rates are in that 3% range, 2 to 3, and then they came up. And they came up big. And then they've kind of just hovered around 7% for a while. Kind of went up to 8% in October of 23. That was terrifying. And then it stayed 7%. They've dipped below 6 a little bit. Came to a low back in September. This past September got to 6.15 and then got back up, and now we're going down again. We're at 6.64. So currently, right now, the day of me recording and uploading this, we're actually going back down with interest rates. Now, who knows if we're just going to continue this hovering around 7? But it is good to know kind of what's happening with interest rates and not just seeing them as, well, they're really high right now. It's like, yes, but there is quite a bit of movement here too. And there's hope that it will dip below 6% soon. I always say hope because anytime I listen to someone who tells me they know what's going to happen in the future with interest rates, it turns out they're full of it. But the last thing I wanted to show you with this is look at the max. Okay, so this is interest rates starting from 1975. And so you've heard everyone say, well, back in the 80s, interest rates were way higher, which is true, but the price of the home was much lower, right? So you have to take that into effect. What I really want to draw your attention to is starting in like 2000, actually probably after 2008 would probably be a better example, right? We've had a relatively stable housing market then. The prices or the interest rate starting here in around 2008, we're looking at low 6s. Low 6% was the norm, okay? And then for a long time, we were just living the dream in the 4 to 5% range. And then we dipped right here, and then it shot up. And we're feeling the effects of it shooting up. But honestly, if you look at the broader picture, we are in line with what interest rates were from 2000 to 2008, around that time. So it's good to understand that. It's also good to understand interest rates have come down a little bit since the past 2 years in 2023 when they hit that 8%. But the last thing I want to show you guys was really the median estimated value for Austin, for Texas, for Travis County. So looking at this chart, this yellow and orange kind of look the same, but orange, this high one, that's Austin proper, Travis County just under that, and then Texas is in red. Okay, you can ignore blue because that's a specific zip code. I just kind of had to pick a zip code. But looking at this chart, you're seeing how home prices, doesn't matter which line you look at, home values were gradually going up and up and up. Like this was a normal market, 2010 up to 2020, absolutely normal, very, very similar growth year over year. Then we had shot up, right? We all know this happened going into 22. Since then, though, we've had a very soft landing, which is good. We don't want any random, huge hikes or any drops to happen with housing. But what I want to draw your attention to is where we are now versus pretend this never happened. If this just kind of continued, where would it get us to about now? And I'm kind of going the same about where we are, right? So this is important to understand. When we see, prices are dropping with the housing market, maybe it's not such a good investment. Over time, it's a great investment. If you bought in 22 when prices skyrocketed, then yes, at some point the prices were going to cool off, right? It doesn't take a genius to think of that, right? But even that, if you bought at the height of it, this has been the soft landing for 3 years when we thought they were going to plummet right back down. And we're in line with where we would have been if we had just kept the regular 5% interest rate, that we had basically from 2008 up to 2020. So I hope this video helped you guys kind of understand a little bit better that when you see these types of articles, it's so not giving you a full picture of what's happening. They're really just probably wanting you to click and look at their advertisement, right? If you want to know what's actually happening in not just the Austin market, but in a local neighborhood, in a local section of Austin, in a suburb outside of Austin, make sure you contact a realtor. You can give me a call, shoot me a text, send me an email, or schedule a Zoom call. All of that's in the description below. If you already know a realtor in the Austin area, contact them. If you don't know a realtor, contact me and 3 other people, right? To just kind of hear different opinions and try to figure out what's going on. But yeah, these articles are just never giving you the full picture. And so I hope, if nothing else, you got to see some charts with me today and learn a little bit more about what's going on in our local market.